Ready to trade the right way? Welcome to my channel, Madam Financially Fit Forex here for you. Please remember to like, share, and subscribe. Love ya. Hello, everyone. Hello, good to have you guys here. Good to be here again to impact more people with knowledge. So, as you all know, I'm a smart money concept trader. I'm mostly a reversal trader, but what I'm about to teach you today is how to find the popular point of interest in my own way. All right, everybody understands the market and has knowledge in their own way. So I'm here to impact you and then teach you about point of interest in my own little way. Okay, I believe this is going to be beneficial for mostly the continuation traders. That's people that go with the trend. I am mostly a reversal trader, so I end up catching a lot of pullbacks. But because I know about the point of interest, it helps me making great decisions as to not to overshoot when it comes to targets. So if I see and I see it by 1:2, 1:3, I'm fine because I know I'm going against the market. All right. So you need to have this knowledge either ways, as a continuation trader or as a reversal trader. So let's get down to it. I don't want to waste much of your time. So perhaps we have an uptrend. All right. If I want to go in this uptrend, I want to see something like this happen. Oh, yes. Smart money concept traders, we all or reversal traders, like I would always fall for it. I fell for this trick a lot. So we will see that it looks like a church is about to happen, a change of character or a shift in market structure. And then she does this and actually comes down like she's about to come down and then takes off again. Oh, this is the most painful thing ever. This is the most painful thing ever. Now, let me show you what happened here. You know what they call the fake out. There's something called the fake out. There's something called manipulation. There is something called inducement. You know, when somebody is being induced into labor, that is what this thing lives for, to induce people into labor up and down. Because traders are like, this is a church, this is a change of character. No, honey, you have just been induced and manipulated because you do this, you feel you're winning the trade, and voila, she comes to the next structure or the next order block and she picks it, and this is your point of interest. All right, this is your point of interest. And then as she picks it up right there, she moves like she just don't care. And you are left there on your own after kissing your stop loss, which would have been here, up here, because you would have gone in for a sell, stop loss right above here, and you would have been feeling like a winner. But if you actually know the movement of the market and you know what's going on, you wouldn't target too much. You might just target, the next liquidity to be swept, and you would have taken your money here because you know you're against the trend. All right. Remember the gold strategy. I was always saying, when you know you're against the trend, please do not target more than a 1:2, which is what is happening right here. Because now this has been induced right here. This is an inducement, a sweep of liquidity, right? It's a sweep of liquidity. It's a fake out. All right, it's a fake out. Inducement right there. Right? What we see is a market switching market structure or a church, but no, what she did was to just come, sweep liquidity, manipulate you, and make you go into a sell. You think you're going into a sell, then she comes back to the point of interest, picks that other bullish order block and moves with it. And moves with it. All right, and moves with it. And that's it. You've been induced. You have been induced into a loss. you have lost your money, and she's taking it and going away with it, right? Now, this happens a lot to smart money concept traders. It's a trap. It happens a lot to reversal traders like me, okay? It deals with us on a daily. But now we are smarter, aren't we? Yes, we are. We are smarter. So what do? You wait to see an inducement has happened on a trend, then you know you're targeting the next. All right. And that's not to say she won't come a little bit down to the next place to pick it up. It's very possible she could do just that. All right. In other words, this would be called an engineered liquidity. But for now, let's stick to this. And she goes with it. This is BOS. All right. This is BOS, which is just a break of structure. A break of structure. Break of structure. Right there. For the bullish trend. All right, that's a break of structure for the bullish trend, up and down like that. So look at that. Now let me show you for a downtrend. And you know, what do you do in a downtrend? You are selling, right? You are selling. For continuation traders, reversal traders are just looking for church. Now this happens, an inducement. You think you are ready to buy. You come here and you click your buy. And then she does this, picks it up at point of entry and moves with it, and moves with your money. All right, with your money. So we know in a downtrend, it's the lows that are being broken right there. Right? The lows are being broken right there. It's the lows that are being broken. All right? It's the lows that are being broken in a downtrend. All right? Let me clone this more so that I can do it fast. Right there. So all these ones are what? Break of structure to the downside on a downtrend. Now, where did your inducement happen? Your inducement happened right here. This was your inducement zone. Manipulation. Right? Yeah, that's what she did. And where is your point of interest? Right there. Your point of interest right here. Right? And then she's taking your money and she's moved. Now, that's how it goes for a downtrend. I'm going to take you straight to the chart so we can see what just happened. It's like magic, right? Pure manipulation. So if you know, and usually those that go with the trend tend to, win a lot of pips, make a lot of money with a lot of, in terms of a lot of pips, okay? So if you're the type that likes to, and swing traders too, if you're the type that likes to swing trade or likes to catch a lot of pips or likes to do continuation trades or doesn't like to scalp, this is usually the best bet because you see yourself, it has great risk to reward as well. So what you're waiting for is to see an inducement happen, and then you know you're going in straight for the point of entry to continue that trend. Now, this is one of my favorite pairs, and I'm going to be showing you straight in the charts. Another thing is make sure you do your what? Your top-down analysis. So for example, I like to start with, in fact, I'm so thorough with it. I like to start from the monthly to see what's really going on, because the smart money doesn't, I mean, they don't mess with the higher time frames. They don't mess with the higher time frames. All right. They don't mess with the higher time frames. I'm going to have to delete. Please, babe, shut the door. I'm going to have to delete this so that, oh my goodness, I don't know. Okay, let's see what's happening on the monthly time frame. Can clearly see it's a downtrend. What should you be doing in a downtrend? You should be what? Selling on a downtrend, right? Good. So on the monthly, we know GU has been going down. On the weekly, you know, GU has been going down. All right, you know, GU has been going down. She's been going down. G has been going down. All right. G has been going down. On the daily, what's happening? Let's see if I can delete all that. All right. It's going to take me some time, but okay, let me remove all 5 drawings. Yeah. So the weekly is also showing downtrends like that. Okay, we know downtrends when 2 or 3 touching, that's fine. So this is a downtrend also on the weekly. All right, this is a downtrend also on the weekly. Just want to check out something. All right, so this is a downtrend on the weekly. Now let's see on the month, on the daily, what does it look like? You have to always make sure you do your top-down analysis to see what's going on. All right, to see what's going on. Yeah, so on the daily, we still see that this is what's happening. All right, downtrend. All right, downtrend. That's what's going on. All right, now if you come closer to the market, it looks like an uptrend is going on here. But let's hold on for that. Let's come down to the 4-hour time frame. Beautiful. Downtrend, even on the 4-hour time frame. Downtrend, even on the 4-hour time frame. All right, even on the 4-hour time frame. Let's go to the 1 hour. Let's see what's going on. Downtrend, even on the 1 hour time frame. All right, so let's get closer to the market though. Let's get closer to the market. I like to execute on a smaller time frame. So let's see what's been happening on the 1 hour time frame. Let's start with what we see here. Oh, look at that beauty. Now, you can see it's been falling down. All right. It's been really dropping. So I'm just going to use my line chart so I can see clearly what's going on and I can see the trend. All right. So let's start with here. I love this. This is very, very consistent. Now let's start with here. We can clearly see the downtrend, but I need you to see, check out something. Let me just mark it from here so that if I turn to candles, I'm very much comfortable with candles, all right? I'm very much comfortable with candles. Very much comfortable with candles, all right? If I do this, then this is wrong. So this is what I will do. You have to know how your trend is running. You have to know your legs because it is a lower low and a lower high. All right. You have to know what's going on. Yes, this is your last leg. So you can see the consistency in this one. I'm going to change it to candles so we can clearly see what's going on. Now look, in between all this, for me to continue this trend, all I'm looking for is an inducement before I go in. All right, all I'm looking for is an inducement before I go in. All right, I'm looking for an inducement before I go in. Now, for example, let's see what's happening here. All right, I usually take it on the 15 minutes. Let's see what's happening here. Where did my chart go? Okay, there you go. Did it go away? Okay, no problem. Let's just come down to the 15 minutes and then, all right, so it went away. That's cool. So let's come down to the 15 minutes and ponder. Let's use the 15 minutes because that's where I like to enter. I don't understand why it left though. Let's go back and see. Why did it go off? Okay, it's right there. Oh, wow. How do I explain this? Anyways, that's fine. But let's use an example of what happened here. Now, for me to continue this trend, I want to see liquidity swept before an entry. All right, I want to see like an inducement. Liquidity swept before an entry, right? That's what I want to see. I don't see it here, but I see it here. Beautiful. I see it here. I'm just going to delete this and I'm going to use this as a typical example. Now, break of structure, mark out your break of structure. Downtrend, break of structure here. All right. Break of structure here, right there. BOS. I want to clone it as much as I can. Break of structure here. This is a downtrend. Break of structure here. So you need to know what's happening. Now, I want you to notice this side. I want you to notice what's going on here. Look at that beautiful. Look at that beautiful sweep of liquidity, right? Now, inducement has happened. Inducement, you could even say to this side, to this point, inducement what happened, right? You could even see to this point, all this liquidity was taken here. All the liquidity was taken. Now, what are you targeting for? You are targeting the next structure for your point of entry, right here. Now, apart from a point of entry, what do you see here? You also see a gap, a fair value gap right here. Now, this is your liquidity that had been swept, and inducement happened here. Now, once an inducement happens, I'm looking above it to see where I can take an entry. There's a gap here on the 1 hour, a 1 hour gap here. And this is my point of entry. Yeah. Structure is there. But look, she didn't even have the energy to get to the point of entry. She continued from here at the gap and pushed down. All right? And pushed down. Now, remember, because you're a reversal trader, this looks like a church to you. No, no, no. This is not a church. Looks like a church to you. It's not a church. Now, when she comes down this way, you are looking to what? You are looking to enter a sell, right? Enter a buy. You're looking to enter a buy because she has reversed backward. Now, if you enter the buy, it will deceive you a bit and then continue downward. All right, and then continue downward. Point of entry has been struck. You will be thinking this is a change of character. You'll be waiting for her to come back. You will take your what? Your buy. She will move a bit. You think you're winning, and look at that. She would have swept your stop loss, which would have been here. All right. This is what you would have been targeting as. This is what you would have been targeting probably as a retail, as a smart money concept trader. This would be your stop loss. Now, you'll be targeting around here. All right. Quite all right. She came down. All right. Look at all that drawdown. You would have been shaking. And remember, this is around here is your entry. But look what happened. You would think that she was going to keep moving up. And there, you see, she came down. She deceived you with an inducement. You thought it was a church. You thought this market was about to turn around. All right. Now look at that. From this point of entry, all right, the fair value gap became the point of interest here before the actual point of interest. So once you see a fair value gap, take your chance. And if she gets here, take your chance. But you have to give space in case she picks up from here. This would be your stop loss. All right. This would be your stop loss. All right. So even if you put it up here, your stop loss will be right there. And you'll be targeting your next move right there. Your next. So this would have been your move. And this baby kept tanking and tanking all the way. I mean, she tanked real good. She tanked real good. Now, this is an example of how it looks on a sell trend. Let me see if I can find one on a buy trend, a bullish trend, and let's see it on DXY, since DXY has been naughty lately. Okay, this is a bullish trend on the 15 minutes. I just want to show you that this happens a whole lot. This happens a whole lot. This is the 15 minutes. Now you need to know your legs. You need to know your legs. You need to know your legs. This is your bullish trend. This is your leg. This is how it moved. All right, this is your leg. You can clearly see that. All right, these are your legs. All the way. Yeah. So higher high, whether you like it or not. A high, a low, a higher low, and that's it. That's your leg. Now I need you to look closely. Look closely. Doesn't this look like a change of character to you? Doesn't this look like a change of character to you? Right? Doesn't it look like a change of character to you? I don't really know if this works, but I just want to show you what I mean. Let's see how it looks. I don't want to see all these breaks. Let's see how it looks on the 1 hour time frame. Beautiful. Oh my God, this is so beautiful. All right. Now, look. This is it. So she comes, this is your leg. She came down, swept liquidity right here. You will be thinking of selling. Now she came to a point of entry, picked it up and moved. You see, and moved and continued on her way up. So let me show you again. All right, look at this. Look at this, look closely. Up, sweep of liquidity, right? First liquidity swept here. First inducement happens here. Then this is the one we call engineered liquidity here. And then this madam came here, the next point for her point of interest. And then she picked her trade and then she moved up. Now, I would have come in here. I would have come in here for an entry, right? I would have come in here for an entry and I would have been putting, oh, this is actually too close. So even if I had put it here, this is too tight. I would have given it some space anyways. Too tight. So I would have entered here and then put my stop loss around here, even if it's not up to here because it's right below here, at least 5 pips. She looks like she would have chopped my stop loss though. But I mean, imagine the beauty of it, right? Inducement, engineered liquidity. This is where I would have entered and, you know, put my stop loss. Yes, this would have eaten my stop loss. But look at the beauty of this thing. As she goes back, you can come down to a lower time frame to actually check, where did she start going back from? She came to pick the next point. So this was your inducement. This was your engineered liquidity, just to make us enter here as a point of interest. And then she came to the next one and voila, she took off from here. Stop loss would have been here. So this is what, for a long position, this is what would have been the case. See all them pips, so attractive to catch a lot of pips, so attractive to have a nice RR, risk to reward. Look at that beauty all the way, man, all the way. Woo! This is about a risk to reward ratio of 14 plus. Yeah. Woo! An RR of 20 RR, risk to reward of 1:20. So with these few points of mine, I hope it is understood how to catch your point of entry. Till then, till next time, see you guys. Have a lovely day. Bye.